Ladies and gentlemen, Investor Talk is back and I welcome somebody new. I welcome John Lee, the CEO of a new nickel company, FLYN Nickel. Welcome, Mr. Lee, for your first appearance here.
Thank you, Jan, for the invite and good to be on your show for the first time.
Today we talk not about precious metals, but about nickel and also a bit about vanadium. Your company is newly listed at the TSX. Please give us, before we come to the metal itself, a bit about your own background and your previous roles.
Yeah, and the FLYN Nickel is a new company that was listed on the Toronto Ventures Exchange in March, about 6 months ago. I have been in the mining industry for more than 20 years, first 10 years as an investor. So I've owned and sold and owned shares of over 200 junior mining companies. And the latter part of 10 years from 2009 to 2012, this 13 years, I actually was the CEO of a number of mining and exploration companies, including Silver Elephant, which is the parent of FLYN Nickel. I have raised over $150 million through the Toronto Exchange and Ventures Exchange for the companies I manage, and which is Silver Elephant and its affiliates. And I've visited over 35 countries, did over well over 30 project due diligence, and bought and acquired and divested probably around more than a dozen mining assets with specializations in nickel. I don't think any other mining junior CEO can say that they have bought or have acquired as many nickel projects as I have. That included nickel projects in Yukon and in Manitoba, other projects in Manitoba, in Ontario. But unfortunately, that was almost a decade ago. And I had to divest that during the consolidation or during the correction phase of nickel.
Great. We come to your Minago property in Manitoba in a moment, but first let's have a look at the market fundamentals. And Kitco is here very useful. Let's see. Here we see the 5-year nickel spot price with the spike, the LBMA spike. And and if we scroll down, we see the warehouse stock that is even more important, I think. Here it is, and it looks really low. So I think the fundamentals are great to be in the nickel market.
Well, yeah, and if you to extend that nickel chart beyond 5 years to say 15 years, nickel has spent more than from 2010 to 2021, around 11 years, trading in a trading band between $5 a pound to $10 a pound. And part of that reason is that I think on the supply side, there is the advent of nickel laterite, which is which is coming from Indonesia and Philippines. So these laterite and Caledonia and Madagascar. So these 3 or 4 countries, the nickel laterite single-handedly accounted for all the nickel increases in nickel production in the last 10, 15 years. And this is what we call the dirty nickel, which we can go into. And then, so that really put a cap and put a supply. So there was abundant supply for nickel in the last 10 years. However, nickel laterite is notoriously difficult to extract and has a lot of environmental issues associated with it. It's called HPAL, which is high pressured oxide pressurization and high temperature leaching. So you have to heat it up to 300 degrees and apply a lot of acid and 50 times more the atmospheric pressure to get the nickel separated from the nickel laterite. So tens of billions of dollars are invested in this promising technology because the investors were attracted to the high nickel laterite grades. However, a number of companies like Vale and the Japanese run into a lot of the technical issues, and the laterite production, even though it has gone up, but never really fulfilled the promise. So for the first time, Jan, in terms of supply and demand of nickel, first time in 2021, nickel supply actually went down 4% from it was in 2020. So despite that push and supply from nickel laterite, the overall nickel production, especially for sulphide, has been very steady on the decline. But collectively, overall nickel is in a deficit. On the demand side, we're all well aware of Elon's profile and Elon's statement 2 years ago, talking about mine as much nickel as you can, responsibly, environmentally friendly. I'll give you a big fat nickel contract. That really gathered a lot of people's attention, both in speculators and and in EV battery space. So I think a combination of, well, actually there is three elements, right? The combination of slower, the less supply of nickel coming downstream, and the demand from EV in the nickel market, which account for around 7 to 10% of the current nickel demand. And that Elon Musk statement attracted some of the speculators that come into the market. And all of that coming together is what you saw there in March when the nickel price went from $10 a pound to $50 a pound. Yeah, we can spend an hour talking about what happened there, but essentially, a lot of the guys that made a lot of money, it was easy to make money in the last 10 years. You buy nickel at $5 a pound, then you sell nickel at $10 a pound. So when that nickel was at 10, a lot of people came in and sold nickel, and then, you know, to many people's surprise, nickel broke out at $10, and a lot of people keep doubling down on shorting the nickel, and it's self-fulfilled, and the short covering ensued, and the resultant nickel price in the action was something that was actually unprecedented in any metal that anybody's ever seen. Overall, I think just one more point. It's not on the LBMA. That's the London Bullion Metals Exchange for gold, but it's actually on the London Metals Exchange, and that is part of owned by Hong Kong Stock Exchange.
And you gave the keyword already. It is important to find own sources because nickel comes from Indonesia, other Asian countries, and we see here a clear geopolitical risk. I found an interesting graphic.
I wouldn't necessarily call it geographical risk, but more dirty, what I call the dirty nickel versus clean nickel.
Okay.
All these countries you talked about, from Indonesia, from Madagascar, from Caledonia, from the Philippines, these countries produce nickel from nickel laterite. And these are the new kids on the block, as we mentioned to you earlier. None of these players existed before 2010. And this nickel is not ideally suited for electric vehicles. And let me explain the reason. These nickel required a very high energy input. As I mentioned, you know, they need to be heated up to 300 degrees and in a very closed container with a lot of safeguards, because you have to apply to up to 50 times the atmospheric pressure, very high acid. So for example, the carbon intensity or the carbon emission output per unit of nickel is up to 100 times, maybe even more, than the nickel coming out of, say, Canada. In case of Manitoba, I was just there yesterday, where the nickel, where the power source is hydro, they produce from the hydro dams, and that the nickel concentrate, up to 30% of nickel can be concentrated without the application of furnace or with the heat. And that is a very, very major difference. And I do believe, I mean, there's already a lot of talk going on in, it's what I call the nutritional table in the future, Jan. Everything you buy, you're going to see that nutritional table, not only the country of origin, but breakdown of the carbon emission, different element, a collective carbon emission that is associated with per unit production. Either it's cars, could be a television, it could be, you know, a utility, everything that you buy. And so it's and you know, to be talking about EVs and the green energy, it'll be a bit ironic and disingenuous to be buying nickel, or to have these vehicles powered by nickel batteries that are some of the worst nickel carbon polluters there in the world.
Of course, if we can produce something at a much more enviro-friendly way, then we should obviously do this. Now let's come to your property. I found a map here at your website. That's Minago in Manitoba. And as we see here in the Thompson nickel belt, there are further nickel deposits. And I read also that they were produced already more than 5 billion pounds. Here on the right side, another very important fact, you have already power and road access available.
Yeah, and I wish I could share some of the pictures. I was just at the Minago project yesterday. I got in Vancouver late yesterday, and 6 in the morning right now. This is the elephant district for nickel. There are, I think you're talking about second largest nickel camp in all of North America, and the 5th largest in the world, and billions of pounds of nickel is being produced. It's only in Canada or in North America, it's only second to Sudbury, but it's actually more nickel production out of the ground than it was out of Voisey's Bay. So you're talking a very significant nickel camp. For the Minago project, there is a Highway 6. We can see the Highway 6 from the helicopter, and it's literally, and you have a road going to Minago about 2 kilometers, and then you saw the deposit. So it has along the Highway 6 is that hydropower line. So you have excellent infrastructure, particularly compared to some of the other nickel projects that are controlled by junior miners listed in Canada. That requires billions of dollars of capex. A notable example would be Noront, the Ring of Fire. Recently, was acquired by Wyloo, by the Australian mining company. It was a bidding war with BHP. I think they started out something around $50 million, and they eventually bid it up to 5 times to more than, I think around $250 million before all said and done.
Interesting. And in your deposit, you have already over 1 billion pounds of nickel in measured, indicated, and inferred resources. And you inherited a large database worth tens of millions of dollars. So it looks like you made a good deal. But I think you even can expand your resource. I read along strike and downwards, it is open. So there is still potential.
The project had over $50 million of investment. Majority of that is spent before 2011 by the prior operator. And that is a fairly common theme. I'm sure, Jan, as you talk to many companies, where a lot of money is being spent, and in the last 10 years, it's set dormant, asleep until maybe last 2 or 3 years when it was picked up again. So Minago is no exception. 86,000 meters of drilling has been completed, including a full-fledged feasibility study in 2009, of which we are updating, extended metallurgical study, environmental baseline studies, and the environmental permitting has been performed. So, the current resource is at around 1 billion pounds. Roughly 2/3 of that is in the measured indicated category, and about 1/3 is in the inferred category. Yeah, that number in itself, while it's significant, but there are other juniors that has got a bigger gun. So what I called. Really what makes Minago special is not so much the resource. It certainly is one of the well-endowed deposits in Canada, but it's grade. Both the M&I and inferred grades of the Minago resource at 0.74%. That is about triple of the most other juniors companies with nickel deposits in Canada at around 0.25. And the numbers make sense. And let me share. There is a research by AME Research. It's a 70-year plus research firm that showed the current mining grades of nickel sulphide open pit projects in the world is at around 0.4%. And so against nickel sulphide open pit active mines currently is at 0.4. And that number was half of what it was in 2005, 15 years ago. So a lot of the open pit deposits in Sudbury, in Thompson, and are all being depleted in the last 10 years. And there's not new nickel sulphide project coming on stream because of the lower price you saw in the last 10 years. So that's what makes Minago really, really special today, because you were probably close to making the cut, but it didn't make the cut 10 years ago. And it sat there for 10 years while everything else of similar grades is being mined out. And then the research further forecasted that the grades is going to halve again to 0.2% by 2030. And the reason that cycle is shortened because of the deficit, nickel deficits we talked about earlier, and also with the picked up in demand on the EV. So it's really that combination of higher nickel grade and that exploitation potential. Now I'll get to your question. Minago has 197 square kilometers of land package, and of that, only 5% of the land has been explored, almost exclusively on the nose deposit, and that is only around 1 square kilometers radius in diameter. However, a lot of geophysics has been done, and our presentation has one of that slides and show that there's a lot of anomalies, what they call the classic Thompson style. It's almost like a V shape, and the apex of the V is the fold. So there's a lot of parallel V's, kind of like clothes hangers, that has been shown in the 100% owned Minago claims by FLYN, and none of that's been drilled. So I think that with a bit more prospecting, and maybe with a bit of luck, even if just one of those dozen plus targets turn out to be another discovery, that would extend Minago's mine life from 10 years to decades more to come. So we believe that what we've seen so far is merely the tip of the iceberg. Jan?
Interesting. You mentioned the feasibility study already. What works are currently ongoing? I read about drilling. And what is your general approach? You are now a small exploration company. Do you intend to produce yourself or develop the deposit and then sell it to a big company?
Right. At the start of the year, the company was listed in March, about 6 months ago, even though it seems so long ago. And the company raised around $8.6 million in the process. We attacked, or we had a three-pronged approach, three major strategic pillars for the project going forward for this year. First one is drilling. So we completed the drill program in around May, a 2,005 meter, a modest small program, and targeted some infill drilling and some exploration drilling. In addition to that nose deposit that we talked about, where majority of the historical drilling took place, there is an extension, a tubular extension to the northeast, and it's called the North FLYN deposit, and that's what we believe the best near-term resource exploration potential. So we drilled a couple of holes in North FLYN and up to 500 meters to test the down dip extension, whereas the previous operator only drilled up to 200 meters. So in that way, if we make a discovery and confirm that the mineralization continues down dip, which we don't see a reason not, based on this disseminated model, then it could be a game changer. as that you could have a deposit almost similar in size to Minago, but more importantly, that the two deposits could actually be connected, and so that could speak to some very exciting development. And the assay results, there's a slight delay in the assay results due to lab turnaround, but we expect to release the drill result, the first batch of drill results in September, and then subsequently in October to complete the assays. So in addition to drilling, the second part is the feasibility study, as you had mentioned. So the full-fledged feasibility study was completed in 2009, and we tendered the contracts. So currently Tech, Mercator, and AGP Mining. So this is a good, reputable geological firms in Canada. Our engineering firms are doing the feasibility study right now. A lot of that is updating of the current parameters. I mean, even though there's an inflation factor, but back in 2010, the Canadian dollar was at 20% premium to the US dollar, and right now it's trading at 20% discount. So I wouldn't necessarily say that this feasibility study is going to be a major sort of escalation in terms of cost from the past. There's some trade-offs on the favorable side as well. So that study will be released before the end of November, is on schedule. And then third element, in addition to drilling to feasibility study, is on permitting. And that is, we're very pleasantly surprised after we acquired the project that we found out that the environmental license, which is the final permit required for the project to undergo construction and production, was actually valid, and with the Manitoba government, and subject to a minor notice of alteration on the tailings location. So we performed technical studies on that specific new designated tailing location under the advice of the mining ministry, and we did find so we make the final submission on the notice of alteration in June, and we expect to receive a decision again before the end of the year. Therefore, at the start of the year, Jan, if we set that for a budget of $8 million, we can do drilling, we can complete the feasibility study, and can get the project all the way to permit shovel-ready status in terms of environmental permitting. Everybody was, get the hell out of here. However, even though there hasn't been a whole lot of news, and nickel had a bit of a correction in the last 6 months since that climax in the peak March, We are well on our way to execute our three major objectives, all before year end.
Interesting. And now we come to vanadium also, because there is a very recent news. Flying Nickel is intending or intends to acquire a vanadium company in Nevada, Nevada Vanadium. What is behind this deal, which brings you another important metal that is needed for energy storage?
Yeah, Nevada Vanadium is a sister company of FLYN Nickel. Both companies were spun out last year from a Silver Elephant. Vanadium is a vanadium. There's an interesting niche in vanadium. It's called, Robert FLYN calls it the miracle metal. And the reason is there's a battery technology called vanadium flow batteries. And these are well-known mature technology invented by NASA almost 20 years ago. And these are big scale batteries that can last for 20, 30 years without degradation, with full charge and discharge, because both ends of the batteries are made out of vanadium that can store charges and discharges. So you don't have composite of metals, and that's what really causes sort of the erosion or the degradation of the batteries. And these batteries can go 100, 200, 500 megawatts, and to complement you ideally for solar and the wind farms. So these are sturdy, big size batteries. And the vanadium VRB, vanadium flow battery, is expected to grow multiple folds, just like the lithium batteries. Suitable for times when the sun doesn't shine or the wind doesn't blow. The acquisition, I would call it really as insurance policy, because under the current metals correction has gone through longer than anybody anticipated since the start of the year. We see that as insurance policy, just in case both metals and metal corrections go longer. We have a bigger scale, a bigger size consolidated company that provides higher liquidity and making the project easier to finance going forward, just to keep the light on and get through the end of the tunnel until the correction is finished. So that's so I prefer to talk a bit more about the transaction once the binding agreement's been signed. Right now, it's at the letter of agreement stage. However, if I can go back to Canada and nickel for a bit, we love doing business in Canada, and we like the project. we were welcomed by the First Nations, and we had a lot of very positive engagement with the First Nations. It's called the Norway House, and had a heart-to-heart discussion with some of the council members and the chief of Norway House that really is very entrepreneurial and look after the nations, around 7,500 people. And the company is committed to develop the resource environmentally, responsibly, and provide a lot of local employment, including training. And this sentiment, I really want to emphasize, it's also echoed. This is not just from FLYN Nickel. This is echoed by Mark Bristol, who is the CEO of Barrick. And Barrick, about 6 months ago on Bloomberg, or on one of the major Reuters, said that Canada is going to be a strategic destination, mining investment destination going forward. You see a lot of turmoils in South America with protests, and United States is right now doing a little bit soul searching on their sense on mining versus the balance between mining and going green. Whereas the appeal for Canada is increasing over time. It's clear for everybody to see. It has a lawful jurisdiction. It has a very competent workforce. It has abundance of power in hydro and good infrastructure, and communities in select few investment and mining communities. Canada has a long tradition in mining and is well endowed in mineral resources. You can't really ask anything more. So I think that Canada is going to go through a new renaissance in the mining space in the next decade or two to come. Yeah,
absolutely possible. Mr. Lee, we are close to the end of our interview, and as the investors know, here in Canada or elsewhere, the people behind a venture are always very important, and the financiers. Who is behind Flying Nickel? Aside you, are there any major investors in the company? Who is behind it?
And I'm the founder and the CEO of the company. As I mentioned, I've spent over 20 years in the mining industry, raised well over $150 million. I specialize in nickel. Nickel is our specialty. We acquired the project in February, so we recruited Rob Van Druden soon after in 2021. And Rob is the chief operating officer based in Thompson, started his career with Inco, which is now Vale, and from the ground up as a miner, and then become a mine manager, a plant manager, to becoming the senior project manager in charge of around 1,000 people in Vale. We also have Mark Scott as a director, and he was the head of the Manitoba Mining Association. He was also the head of Vale Thompson operation. So there's a lot of relevancy. And then the Doug Ramsey, who is the environmental manager, and Doug has over 40 years of experience in environmental permitting in Canada, including 20 years in Manitoba, often represent the Canadian government and the First Nations. So he's able to bring together all the stakeholders into a common cause. And we have Rob Smith, who he is exploration guru for Vale in Thompson. What you notice, Jan, is the company skill set is transitioned from exploration and M&A towards production, operation, and permitting and community relations. So our exit strategy is we obviously a public listed company. We're open to discussion with strategic investors and bigger mining companies. We've already been talking to 10 right now. However, I think if the capital market is conducive to provide good terms and the good metal price, we certainly are looking into putting this project all the way to production, especially if that's our shareholders like to see. And in terms of our register, we did an IPO round for around $8.6 million at 70 cents. And Blackstone Minerals, an Australian listed mining company, is a major shareholder, along with institutions in Germany and also in Toronto and New York. So we got about over 50% in the register are owned by institutions and insiders.
Okay, that's a very good plus point. Thank you for the interview. And for investors who like to know more, they find information in the box below the video. And to mention for me at the end, Mr. Lee, the current price is 16.5 cents, the pain for one, opportunity for somebody else.
Well, yeah, and if I allow me to conclude in 60 seconds, a remark is that never would I thought that the nickel, like right now, our market capitalization is exactly 12 million with $3 million in the bank. And that is half of what the company paid for the asset before the run up a year ago. And that's 1/6 of the total investment that has gone into the company. So I want to assure that that fundamentally we have a lot of news coming on. There's absolutely nothing adverse material that is disclosed to the market, especially for a nickel project at such high grade of 0.74, a league of its own. And the project would be shovel ready by the end of the year. And it has the lowest, arguably potentially the greenest nickel mine in the world. I think a combination of all three factors make this company a very compelling investment proposition.
Thank you, John Lee. That was a very interesting topic. Thank you for today and have a good day in Vancouver.
Thank you for your time.
Thank you. Bye-bye.